Ray Dalio's diversification trade is sputtering and investors are bailing on risk-parity funds. Bloomberg's Justina Lee reported on what's happening to this trade. She joins me now. Justina, why did risk-parity perform so poorly in more recent years, and how has that spurred an investor exodus so far?
Yeah, I mean, if we go back to what is risk parity, right? It's all about diversification. So you put more of your money in like commodities and bonds, but then the problem is, bonds don't tend to do as well as stocks over the long term. So you leverage up that exposure. Now, the problem with kind of markets over the last 10 years is that diversification simply has not been the winning trade. I mean, I think everyone who kind of just looks at their personal account can tell. I mean, the best bet has been, just the S&P 500, right? And so if you're in a trade that's all about diversification, then that's not going to look as good as even a simple 60-40 portfolio.
Well, what's fascinating to me is the thesis itself here flawed, Justina, or has something changed about the market, particularly given investor thinking about how to diversify? 60-40 itself has been a huge controversy.
Yeah, exactly. And I think part of the problem is that even for a lot of sophisticated institutional investors who are thinking about diversification, they just don't think risk parity is the answer anymore. Like, a lot of people are turning into private assets or they're turning to hedge funds, but they're just not turning to risk parity. And that kind of makes sense. And I think a lot of risk parity proponents would tell you that the problem is, hindsight bias. Everyone's just thinking about the last few years. But if you look back at the period before that, if you look at the global financial crisis, I mean, it sure looked pretty good to kind of have some commodities, have some bonds. And so they're telling people to hang on because you never know what markets are going to look like next.
What does this mean for Bridgewater, given that Ray Dalio was such a pioneer in this business? What is investors doing around the all-weather fund in particular? What are they saying?
Yeah, I mean, Bridgewater didn't comment on this story, but in some of their communications with pensions, which are public, we've seen them kind of present this defense that, of course, risk parity hasn't done as well in the last 10 years. But if you look at a lot of the forces, that have helped equities in the last 10 years, they're actually turning. They're talking about deglobalization, the fact that rates are going up now. And so from that perspective, they're telling clients to kind of hang on. But I think, they're also falling prey to this general trend. And so they've also seen assets in the all-weather fund go down as well.